Good afternoon, guys. Today we are going to start with a very important topic, valuation in customs. Okay, so we'll wait for a couple of minutes, then we can start. And also what we are going to do is day after tomorrow, we will solve the big questions on GST, okay, where your ECL, electronic cash ledger is given, all kind of GSTs are given, inward supply is given, outward supply is given. Okay, so start revising our GST chapter. Okay, because then that big question, that jumbo question, will incorporate all the adjustments of GST that we have learned. Okay, and someone has already sent me that question, I think, so we'll take that question only. Yeah? But for that, you guys need to revise everything of GST. Okay, what is the inward supply, what is the outward supply, what are the eligible input tax credit, what are the three kinds of ledgers, okay, and how we claim our ITC. So revise that, and day after tomorrow or the day after, right, we will solve that jumbo question on GST. Okay, so GST valuation questions we have done, ITC questions we have done, right? But then both concepts will be combined together, valuation as well as ITC concept will be combined together, and one big question might be asked. All right. So today what we are going to focus is on valuations under customs. Okay, valuations under GST is done. Now we will focus on valuation under customs. Very important chapter, guys. Very important chapter. Okay, and this can come up to, let us say, 8 to 10 marks. Valuation under customs can also come up to 8 to 10 marks. Okay, baggage valuation we have done yesterday. If you are carrying goods along with you while returning to India, that valuation is different. That is called as baggage, that we did yesterday. Today we are thinking from the point of view of trader and manufacturers, from the company's point of view. Yesterday what we did was from passengers point of view, crew members point of view. Okay, today what we are going to do is from company's point of view, trader and manufacturers point of view. When we import goods into India, okay, when we import goods into India, what is the valuation and how much is the customs duty that we need to pay? All right, let us start. Okay, so I'll just write it down one by one below the other, and then whenever we need the rule, we will refer to the rule. Okay, so we are looking at valuation under customs. We are looking at valuation under customs, right? Very important because it can come up to 8 to 10 marks. Direct question, direct questions. So we want to know valuation and custom duty payable. Custom duty payable, total tax payable, right? That we want to study today. Okay, so valuations, when we start valuation will include the following. Okay, so let us say I have imported goods into India. I have imported the goods into India, right? So my valuation will be on the basis of something called as FOB, that is free on board. Okay, I'll start the valuation with something called as FOB, free on board, without any freight, without any carriage, without any insurance. So this is without any freight. Freight is transportation cost, carriage, or insurance. Okay, without any freight, carriage or insurance. So you have to always start your question with FOB. You always have to start your question with FOB. If CIF value is given, if CIF, what is the CIF value? Carriage, insurance, and freight. If the CIF value is given, what you will do? First, deduct all these three values, right, and get FOB value. You will always start your valuation solution will always be started with FOB value, free on board value. So free on board is without any carriage, insurance or freight. So if CIF value is given, CIF is carriage, insurance, freight value is given. First deduct all these three values. First deduct all these three expenses and get the FOB value. See if you understood till here. What is the difference between FOB and CIF? So I want to start my valuation question with FOB. FOB is the value of goods. In short, FOB is the value of goods. FOB is nothing but the actual value of goods as per the supplier. So FOB is the actual value of goods as per the supplier, and then we will start adding carriage, insurance, freight as per Indian custom rules. We'll start adding carriage, insurance, freight as per Indian custom rules. Okay, and then we'll adjust the following expenses. Now let us see the rules. Okay, so those who have come late also, you understood now FOB and CIF. FOB is without carriage, insurance and freight, and CIF value is inclusive of carriage, insurance and freight. So when I am starting my valuation, I'll always start with FOB. If CIF value is given, deduct these three expenses, get FOB value and start your question with FOB. This is very important. Starting the question with FOB is very important. Okay. Now, what are we going to adjust? First thing we are going to adjust is commission and brokerage of our agents. Okay, commission and brokerage of our agents. So we'll take all commissions and brokerage except buying commission. Okay, we will take all kind of commissions and brokerage, but will not adjust buying commission. We'll totally ignore buying commission. Okay, so the first thing that I am adjusting, adjust the following expenses. First thing is what? Adjust all brokerage and commission, okay, except buying commission, Customs authorities do not allow buying commission to be added in the valuation. Okay, and all these value, when you are importing, all these value will be in foreign currencies. The values will be in foreign currency. First, we'll calculate the total value in foreign currency, and then we'll see at what rate we want to convert it into Indian currency. In GST, this problem was not there. In GST, this problem was not there. Sir, this is the case when we are importing goods. Yes. Customs is only for importing goods. Okay. So when we are importing goods, our value will be in foreign currency. All this valuation that I'm writing over here, will be in foreign currency. Then we'll see at what rate we need to convert it. Okay, so we started with FOB value. And we are adjusting all following expenses. Adjust means add. In this case, adjust means add the following expenses. First, we'll add any kind of brokerage and commission except buying commission. Okay, then second, cost of container, the container in which the goods have been given to us, the goods have been imported. Cost of container will also be added. Okay, cost of container will also be added in the cost of goods. Cost of any kind of packaging, let it be primary packing or secondary packing, does not matter. Okay, any kind of packaging or packing, that cost we are going to add. Okay, so we started with FOB value. So I'll just write it over here again. Oops. So we started with FOB value, right? And then we are adding these following costs. All right, next. Till here, no doubt now? Just like GST, we have to see what to add and what to not add. Then we are going to add up any free assistance given by the buyer. Okay, so whatever buyer is also giving, just like GST, whatever cost of packaging is not included in FOB. No, FOB is free on board. FOB is just the value of the basic goods. FOB is just the value of the basic goods. Okay, that's why we are starting with FOB. It does not contain any other thing. It does not contain any other thing. So next thing we'll add is free assistance given by the buyer. It is just the same as GST. Okay, so for example, I'll just give an example. So fourth is any material / service given by the buyer himself. So this we have done in GST also. Example. Let us say Mr. A is going to import finished goods from Mr. B of China. Okay, Mr. A of India is going to import finished goods from Mr. B of China. However, Mr. A has supplied the raw material, okay, worth let us say 4,000 yuan. Yuan is the Chinese currency. Mr. A has supplied the raw material worth 4,000 yuan. Okay, and Mr. B has processed it into finished goods, and the finished goods value is coming out to be, let us say, 5,600 yuan. Okay, and Mr. B has raised an invoice of how much? 1,600 yuan. Correct? Because the actual processing costs only 1,600 yuan, but the finished goods value is 5,600 yuan. Okay, so now you guys tell me, import duty, when I pay the customs duty, should the customs duty be paid on 4,000 yuan, 5,600 yuan, or 1,600 yuan? On what value? It should be correct. It should be on 5,600 yuan. Even if the invoice value is only 1,600 yuan, the tax, the duty will be on the value of the finished goods. Doesn't matter even if Mr. A himself, the buyer himself, has provided the material or service. Okay, the duty will be always on the value of the finished goods. So finished goods value is 5,600, out of which 4,000 is of the ownership of Mr. A only. Okay, so Mr. B has only given services worth 1,600 yuan. Bill is raised only of 1,600 yuan, but still duty will be on the entire 5,600 yuan. Okay, this same as GST. So any material or service given by the buyer, okay, before the goods were processed, goods were imported to India, I'll say imported to India, right? All that material and service will also be inclusive, even if it is the ownership of buyer. Still it will be included in the value of finished goods. Understood this fourth point? We have done this fourth point in GST also. All right, next. Fifth point, any royalty or license fees, okay, will also be added. So let us say if you are a regular importer, you might have if you are not a regular importer, you'll have to pay license fees for importing. Okay, or you are going to pay royalty on any of the amount of goods. So any kind of royalty or license fee required to import the goods, into India. All right, so that will also be added. So if you understood till here, we have started with free on board value. We have started with free on board value, and we are adjusting, we are adding all these costs. We are adding all these costs. Okay, next. All right. And now comes the important part. Now comes the important part of insurance, freight. Okay, insurance, freight, and carriage. Okay. So in insurance, first let us see the simpler part. Let us see the simpler part. So now what you will get is you will get adjusted FOB. You will get the adjusted FOB. You started with FOB value, free on board value. You have adjusted 5 expenses. You have added 5 expenses, right? You are getting adjusted FOB, and now you'll adjust. Now you'll adjust carriage, insurance, and freight. You'll adjust, that is add. Again, adjust here means add carriage, insurance, and freight. Okay, but the rules for adding carriage, insurance, and freight are different. Okay, insurance. So let us first talk about insurance. Insurance is very simple. Insurance cost. Okay, you have to add it. Insurance cost, you have to add it. So it is very simple. If insurance cost is given, if insurance cost is ascertainable, ascertainable means it is given. If insurance cost is ascertainable, take the actual cost. Take the actual cost. Simple. They will give you. They will give you in the question whether the insurance cost was ascertainable or not. If the insurance cost is ascertainable, it can be calculated. Okay, it is actually calculated. Take the actual cost. No problem. No problem. But see, if the insurance cost is not ascertainable, then you'll have to take 1.125% of the basic FOB. You'll have to take 1.125% of the basic FOB. All right. This happens when B or B, if insurance cost is not ascertainable. We don't know. We don't know how much will be the insurance cost. Okay, then it will be 1.125% of the basic FOB, not adjusted FOB. Basic FOB value. So here I'll write the basic FOB value. Okay, basic FOB value. So if insurance cost cannot be ascertained, they will give in the question. If the insurance cost cannot be ascertained, then still we will take 1.125% of the basic FOB. This is the basic FOB. See if insurance cost is clear to everyone. Okay, yes. Next. Now comes carriage and freight. Okay, carriage and freight. Okay, these are nothing but my transportation cost. These are my transportation cost. All right. Now again important. If carriage and freight are ascertainable, okay, same thing. I'll just read out the rule. Okay, if the carriage and freight are ascertainable, then for vehicles and vessels, okay, so if you are importing through land or if you are importing through water, okay, then actual transportation cost will write as it is. Okay, and if it is imported through aircraft, then actual value or 20% of basic FOB, whichever is lower, we have to take. Okay, so now what I'll do is I'll write it in a better way. Carriage and freight. Okay, carriage and freight of, let us write carriage and freight of vehicles / vessels. Carriage and freight of vehicles and vessels will write separately. Okay, and carriage and freight of aircrafts I'll write separately so that there is no confusion. Okay, carriage and freight of vehicles and vessels. So if you are importing through vehicles or vessels, that is importing through land or sea. If you are importing through land or sea, okay, then your freight, again the same thing. If it is ascertainable, what you'll do, you'll take the actual cost. Simple. You'll take the actual cost. Okay, and if it is not ascertainable, if it is not ascertainable, then how much you'll take? You'll take 20% of basic FOB. You'll take 20% of the basic FOB. Just like insurance. Okay. So insurance was what? If it is ascertainable, take the actual cost. If it cannot be calculated, take 1.125 of the basic FOB. Same goes with carriage insurance, sorry, carriage and freight of vehicles and vessels. That is, if you are importing through land and sea, right? And if the freight, if the transportation cost is ascertainable, take the actual cost, no problem. And if it is not ascertainable, then take 20% of the basic FOB. All right. Now the carriage and freight for aircrafts is different. It is different. So if it is ascertainable, okay, then take actual cost or 20% of FOB, whichever is lower. In case of aircraft, the rule is even more strict. If it is ascertainable, if the freight, transportation cost or carriage, okay, of aircraft is ascertainable, then we'll take actual cost or 20% of FOB, whichever is lower. Because the problem is, if you bring the goods through chartered flight, the actual cost will be even higher, right? So government will say we will not charge duty on that higher cost. We will charge the duty on actual cost or 20% of FOB, whichever is lower, right? And simple, if it is not ascertainable, okay, then simple, that will be 20% of basic FOB. Here also basic FOB, yeah? Here also basic. So you have to just be careful about carriage, insurance and freight. Okay. If CIF is clear now, insurance is easy. Insurance does not matter whether you are bringing through vehicles or vessels or whether you are bringing through aircraft. Insurance is always either take the actual cost, and if actual cost is not given, take 1.125% of basic FOB. Same logic for vehicles. Okay, take the actual cost if given. If actual cost is not given, take 20% of basic FOB. If it is, the doubt is, if it is not mentioned whether the carriage is by vehicles or aircraft, you will make an assumption. That the import is through aircraft. Okay, you will make an assumption that the import is through aircraft. Explain aircraft again. Okay, I'll explain the aircraft wala version again. If let us say my FOB value, basic FOB value was 100,000, 1 lakh. Okay, and they have given aircraft freight is given as 45,000. So now aircraft freight is given. If it is given means what? It is ascertainable. So if the aircraft freight is ascertainable, which value should I take? You guys tell me. Your freight is ascertainable. So we take which value?
20% of.
Correct. Actual freight, will take actual freight or 20% of FOB, whichever is lower. So the actual freight is 45,000 or 20% of FOB, that is 20,000, whichever is lower. So we take 20,000 will be our freight. 20,000 will be our air freight. What is understood now? Okay. And let us say if this was 15,000, then 15,000 or 20,000, whichever is lower, we would have taken 15,000. Okay. And if they say FOB is 1 lakh, okay, there was freight while importing the goods from aircraft, but the freight was not able to be calculated. Then we don't care. We directly take 20% of FOB. All right, this example is clear. See if it is clear till here, guys. Valuation till here. Okay. 63 participants. Who are these freebies who are coming to the class? Please leave the class. Huh? If you have not taken the admission, I am not going to see who is taken the admission or not. Okay. If you have shame enough, you will leave on yourself. Leave by yourself. Okay. Next. So basic FOB, adjust these expenses. You'll get adjusted FOB. Then adjust insurance, carriage, and freight. Now finally, you will get what? You will get your transaction value. You'll get their transaction value, but guys, pay attention. This value is in which currency? We have
Foreign
imported the goods, right? This value is in foreign currency. Now, if I want to pay duty in India, first thing, what I'll have to do? Convert transaction value into home currency, right? Into Indian currency, Okay. Now this is also important. This is also important. Convert transaction value into Indian currency. Now see, I'll give an example. They have given 4 conversion rates. $1 is equal to 75 rupees is the rate on bill of entry, on the bill of entry date, okay, given by bank. Okay, then $1 is equal to 74 rupees is the rate on, again, bill of entry date given by CBIC. What is CBIC? Anyone knows? CBIC is Central Board of Indirect Tax and Customs. Central Board of Indirect Tax and Customs. Okay. Then this is rate on let us say clearance of goods, date on clearance of goods given by bank. Okay, and then $1 is equal to 76 rupees is the rate on the date of clearance of goods, given by again CBIC. There are 4 exchange rates. So now what I want to do, the transaction value is in foreign currency, right? Transaction value is in the foreign currency. I want to convert the transaction value into Indian currency. Now out of these 4 rates, which rate should I take? Should I take the highest rate, lowest rate, average rate, or should I take a specific rate?
Rate on bill of entry date given by CBIC.
Correct, perfect. I'll take the rate on the date of bill of entry, and I'll take the rate which is given by CBIC. Okay, this is very important. This is very, very important. Okay, there will be 2 dates, bill of entry date and clearance of goods date. Okay, so rate on the date of bill of entry, this will be first date. Okay, and then there will be rate on the date of clearance of goods by custom authority. Custom authority will clear your goods, na? That these goods are cleared to be imported, to be taken into India. So there will be 2 dates, bill of entry date. Bill of entry date will be first date. Okay, and clearance of goods will be the second date. Clearance of goods will be the second date, right? But now on each date, the banks will give different exchange rate, and CBIC, Central Board of Indirect Taxes and Customs, will give different rate. Okay, so I want to choose, we want to choose which rate? We want to choose the rate on date of bill of entry, right? And the rate which is given by CBIC. So we will take $1 equal to 74 rupees. This rate will have to take. See if you understood the conversion. Yes or no? I want to convert the transaction value, which is in foreign currency, and want to convert it to Indian currency. The problem will give you multiple exchange rates. Okay, you have to just focus on two words, bill of entry and CBIC, right? So just find bill of entry and CBIC, and that rate will be taken as our exchange rate. You have to be very, very careful about this. You have to be very careful about this. Now, finally, I have got what? Now, finally, I'll get transaction value in what? In home currency, in INR. Transaction value in home currency in rupees. If you understood till here, guys. See, I'll again explain this. Just quickly, I'll recap this. I'm starting with basic FOB. All right, I'm starting with basic FOB. I'll adjust all these 5 expenses. I'll get adjusted FOB. In adjusted FOB, I'll add carriage, insurance, and freight. Okay, that depends upon whether it is ascertainable or not. Okay, then I'll get what? I'll get the transaction value. But the problem is this value is in foreign currency. Okay, this value is in foreign currency. So now convert the transaction value into Indian currency. You'll have to convert it. So for conversion, there will be multiple rates given. We want to choose only this bill of entry and CBIC. Okay, I want bill of entry and CBIC. Okay, so finally I'll get transaction value in home currency. Okay, transaction value means this is the value on which duties will be paid. Duties will be paid. Values on which duties will be paid. All right, done till here. Sir, what can be example of expenses adjusted in FOB which is supposed to be ignored and not added? That buying commission will be ignored and it will not be added. And any expenses which are paid after the goods are taken out of the custom port. So for example, I am importing the goods from Sri Lanka to India, right? Sri Lanka to Chennai, to be specific. Okay, so I am importing from the goods from Sri Lanka to Chennai, right? And now what is happening? Any cost that I pay till the goods reach the port of Chennai, right? Till the goods reach the port of Chennai, all those costs I'll take except buying commission. Okay, right? Like agent fees, buying agent fees, right? So buying commission, apart from buying commission, I'll take all the costs that are required to bring the goods from Sri Lanka to Chennai port. Okay, and in that you have to be careful about insurance and freight. Okay, so 3 things you need to focus. Buying commission you will ignore, insurance and freight we have seen the rules. Now once the goods are unloaded and taken into the custom port, okay, any expenses paid after custom port, once the goods are brought into India, right? Once the goods are cleared by the custom authority, and now if you bear any transport charges to bring the goods from port, Chennai port, to factory of the buyer, correct, those expenses will be excluded. We don't need to take those expenses. Any expenses after the goods are cleared, okay, those expenses will not take. Is this clear? All right, done. Next, now value on this is the final value. This is the value. This is the final value, assessable value. We can also call it as, or also called as, assessable value. Assessable value, AV. Assessable value, that is AV. Okay, this is the value on which the duties will be paid. Okay, the duties are BCD, basic custom duty. Okay, then social welfare surcharge. So now landing charges are not there. Landing charges are no longer there. Okay, basic customs duty, social welfare surcharge, and then because I am importing, which kind of GST?
IGST.
Perfect. integrated GST, or also called as IGST. Okay, basic custom duty, add social welfare surcharge, and add integrated GST. These three duties I'll have to pay. Okay, now see the problem again. Now see the problem again. On basic custom duty, there will be again 2-3 different types of duty. So there will be duty on the date of bill of exchange, sorry, bill of entry. Okay, and duty rate, the duty on the date of clearance of goods. Now, which rate should I take? Duty, that is percentage. This will be in percentage. Huh? Which percentage should I take now?
Bill of entry, sir.
No, here we'll take whichever is later. Whichever is later. Okay. So obviously clearance of goods will be always later, but still the rule says you have to take whichever is the latest date. The rate, the custom, the BCD rate on that date will be taken. BCD rate keeps on changing. Huh? The BCD rate might keep on changing. So when you entered into what I can say, when you entered into Indian territorial waters, that time the rate was 10%. Okay. When you gave bill of entry, that time the rate was 10.2%. And when you unloaded the goods, that time the rate was 10.5%. And when you cleared the goods, that time the rate was 10.8%. I'll take whichever is the later rate. Okay, whichever is the latest rate, I'll take as my basic custom duty rate.
So that percentage will be charged on accessible value, right?
Correct. And this will be charged on accessible value. This percentage will be charged on accessible value, on AV, on accessible value. So basic custom duty will be charged, always charged on the accessible value. Understood, guys? Okay. If you are clear till here, say if it is clear till here, everyone. So we have adjusted FOB, we have added insurance and freight, we have got the accessible value, also called as the transaction value. On that, we have calculated BCD. BCD is a percentage. Now, which rate to take, we have known, and that will be calculated on the accessible value. Now, the social welfare surcharge. Now, pay attention, huh, guys. The social welfare surcharge will be 10%, but that 10% will be only on BCD value. Huh? Don't take on accessible value, or don't take on accessible value plus BCD. It will only be on 10% on the BCD value. So surcharge is always on custom duty. Surcharge is always on the BCD, basic custom duty value, BCD value. Okay, I think there are some doubts. Where to find the rates? Rates will be given. The problem is they will give multiple rates. We have to just choose the right rate. Rates will be given. Clearance will always be after the bill of entry. Yes, yes. But sometimes what happens? After clearance, there can be amended bill of entry, right? Okay, so we'll take whichever is the later date. Third doubt is, if the question asks us to just calculate the accessible value, then we don't have to add these other duties. Yes, yes. If the question says calculate accessible value, your answer will be here. This will be the final answer. Okay. If your question says calculate accessible value and tax payable, correct, then you'll add these three. Okay. So understood now, basic custom duty will be on the accessible value. Huh? This BCD will be on the accessible value. Add social welfare surcharge, that will be 10% on only the BCD value. Only the BCD value. Correct. And then finally, the IGST. IGST will be whatever percentage. IGST will be given. We'll just take that percentage because IGST differs in case of different type of goods. So it will be given percent, whatever given percent is there, on which value? On accessible value plus BCD value plus this value. So integrated GST will be on all inclusive value. Okay. So that will be the final value of imported goods inclusive of all taxes and duties. That will be my final value of imported goods inclusive of all taxes and duties. Okay, so a little bigger calculation is there. So you just have to see whether they are only asked assessable value or they are asking the final value.
So,
Huh.
Aren't we charging double taxation like for IGST? we're
Yes,
calculating-
IGST will be on the actual landed value after the customs duty. So IGST will be on a value inclusive of BCD. Because I'll tell you why. I'll tell you why this is important. This is double taxation, but this is to protect the domestic manufacturers of India. Because if you purchase from domestic manufacturer, you still pay GST, right? And if you purchase from foreign manufacturer, you still pay GST. So that's why this GST will be on a value inclusive of all these. So it is double taxation. That's okay. That rule is there for protecting our domestic manufacturer. Because of double taxation, the value of imported goods starts to increase, right? And that is what the government wants. Government wants that people should buy from India and not buy imported goods. So that's why this will be double taxation. That's okay. That is what the government wants.
Okay, sir.
Understood the entire thing, guys? Understood this entire format?
So for the transaction value, when if the rate on and bill of entry date given by CBIC is not given, then what's the second option?
They will give it. They will give it. There
So
is no
that's
other
the-
option. We
yeah.
have to take this rate.
Okay.
Or they will just give a rate $1 equal to 74 rupees, and they will not mention anything. Then you will write assuming that this is the rate on the date of bill of entry given by CBIC. If only one rate is given, take that rate. If only one rate is given, take that rate. If multiple rates are given, choose the rate on the date of bill of entry given by CBIC. Okay. So probably in your exam, you might be just given one rate, but you should know the concept. Na? You should know the concept. If two rates are given, which rate to choose? All right. And then for duty also, which rate to choose, you need to know. Okay. Any doubt, guys? Any doubt? Is there any doubt in the group chat? Okay. All right. I think all the doubts are clear. Let us do first. Let us do the normal questions, simpler questions, and then we'll go on increasing the difficulty level. Should we start the questions, guys? Is valuation clear till here? All right, chal, we'll see. Our number of students is increasing only. 65 participants today. If you want to attend the class and if you cannot afford it, I'll let you sit free of cost. If you cannot afford it, I'll let you see free of cost. But if you can afford it, just pay the fees. Okay. Don't be idiots. Okay, let us see this. The compute the total duty. You can see the question on the screen, right?
Yes, sir.
Okay. Compute the total duty and integrated tax payable. So they are asking compute the total duty and integrated tax payable under the customs law on an imported equipment based on the following information. So assessable value is already given. So our job is easy. Assessable value was already given, right? Assessable value is already given over here. How much is the assessable value? $10,100. It's given in dollars. It's given in dollars. It is given in foreign currency. Okay. Now we know assessable value is given. What is the next step? Convert to home currency. Correct. Convert to home currency using which rate? CBIC rate on the date of bill of entry. On the date of bill of entry. We know this, right? We know this. Bill of entry. Find out that rate. What is the rate? Date of bill of entry is 25th April. Date of entry invoice is 21st April. Okay. And the CBIC rates, they have just given the CBIC rate is $1 equal to 65 rupees, $1 equal to 70 rupees. Which one should I take? 25th April ka rate, right? So I'll take the rate of $1 because that's the rate I want, na? Bill of entry rate and CBIC, Central Board of Indirect Taxes and Customs. So that's the rate I wanted, 65 rupees, right? So my assessable value in rupees, in Indian currency, in my home currency is what? Is 10,100 into 65. This is in rupees. Okay. So on this value, I'll start charging my duties. If this is clear, why I have not taken 70 rupees over here? Okay, next. BCD. So BCD, so now again see, BCD will be, the rate of duty would be rate as prevalent on the date of filing of bill of entry or entry inwards, whichever is later, right? Whichever is later. So in this case, bill of entry is 25th April, entry inwards is 21st April. In both cases, BCD is different rates, right? So which rate should I take? BCD
25th
rate,
April, 10%.
correct. BCD rate on the date, whichever is later. So later date is the 25th April ka date. Okay. Someone was asking this doubt, na? Bill of entry, can it be filed later on? Yes, it can be filed later on. So 25th April ka rate is 10%. So my BCD will be 10%. So basic custom duty will be 10% on 65,600. Sorry, 6,56,500, right? So this is this amount into 10%. Okay, simple calculation till here, no problem. BCD done, right? Now after BCD, what I want to do? Social welfare surcharge. Guys, pay attention. Even if this social welfare surcharge is not given, you will by default add 10%. Okay, even if this social welfare surcharge is not given, you will add 10%. Okay, so SWS is 10% on what value? 10% on
BCD.
10% on BCD value. 10% on BCD value. So this value, this amount into 10%. Okay. So that will give me what? That will give me assessable value plus BCD plus SWS. So that will be assessable value plus BCD plus SWS. Correct. And on this value, I'll add what? I'll add my IGST. IGST at what rate?
12%.
12% given, 12%. So this amount plus, sorry, into 12%, into 12% is my IGST. And final value of imported goods. Final value of imported goods is this amount plus this amount. So is it entirely clear to everyone? Is this entirely clear to everyone? So we started with assessable value. We converted using a specific rate. Okay, that rate is bill of entry and CBIC. Just remember two words. Then you get assessable value in home currency. You get the assessable value in home currency. Then you will have to take basic custom duty rates. But again, two rates are given for basic custom duty. I'll take whichever is the later date. The rate on the later date. So later date was 25th April. So I took the rate on 25th April of 10%. So BCD is 10% on assessable value. 10% on assessable value. So oops. So that was This was the assessable value into 10%. Then SWS, social welfare surcharge, is 10% on BCD value, this amount. Then I took the total of these three. And on that value, I added IGST at 12%.
So what is that note? Ignore GST compensation. Sir?
Okay, so now I have written this ignore because it is new amendment. Okay, new amendment after September 2021 is not applicable to you guys. Okay, so on this IGST also there is GST compensation cess, but that is just a new adjustment. Okay, so new amendment, so that you guys don't need to worry about it. Okay, that is the amendment of 2022, so that you guys don't need to worry about. For your syllabus, we are only taking up to September 2021. Done, guys? Is this understood? All right. Let us do one more, not one more, 3 to 4 more questions. This was where assessable value was directly given. Huh? Assessable value was directly given. Now, let us do one more thing. If there is any doubt, I can explain it once again. Huh? No problem. If anyone has any doubt, simple doubt, silly doubt, calculation doubt, I can explain it once again. No problem. This is very important for you guys. All right. Let us do this question now. Okay. Sir, this type of question will be asked in MCQ section or a longer section. Na? This will be longer question. This will not be MCQ. They might in MCQ, what will happen if there is MCQ, they will say assessable value is so and so, calculate BCD and SWS. Okay. All right. So the above question, the question that we solved right now will be around 4 marks. Huh? The question that we just solved will be around 4 marks. That's a simple question. Na? Assessable value was given. Now we'll start solving 8 to 10 marks wala question. Huh? Where assessable value also you have to calculate first and then calculate the duties. All right. From the particulars given below, find out the assessable value of imported goods under the Customs Act 1962. Cost of the machine at the factory of the exporter is $10,000. Transportation from the factory of the exporter to the port of the shipment is $500. Handling charges paid for loading the machine in the ship is $50. Buying commission paid by the importer is $50. Freight charges from exporting country to India. Freight charges from exporting country to India is $10,000. They have not given anything. Huh? Have they given whether it is air freight or vehicle or vessel freight? They have not given anything. Huh? So we'll assume it is air freight. Exchange rate to be considered, they have only given one exchange rate. So we are again assuming it is bill of entry and CBIC rate. And actual insurance charges paid are not ascertainable. You guys want to try this on your own? They have just asked you to calculate assessable value. Just calculate assessable value. No need to calculate BCD, SWS, and IGST. Okay, try this on your own. Okay. So the cost of the machine or cost of the goods is the basic FOB. Yeah? The cost of the actual thing you are importing is the basic FOB.
So what did you mention about social welfare surcharge?
I said in this case, you just need to calculate assessable value. Na? You don't need to calculate BCD or SWS. You don't need to calculate that. That is not asked. Na?
Okay. Okay.
So FOB will be the basic value. Huh? It will be the basic value of goods or machine, whatever is given. Yes, cost of machine is basic FOB. We don't need to deduct CIF. See, they will give, if they want to give CIF value, they will specifically say it is a CIF value. Okay. All right. Okay, we are already getting answers. Good. Let us see. We'll see. So FOB value is given. FOB value is given. So this is in dollars, huh? Particulars and dollars. Particulars and dollars. So FOB value is $10,000. $10,000. Okay. Now add. Should I add transport charges from the factory of exporter to the port of shipment? Should I add it?
Yes, sir.
Yes, because this is from exporter, not to the importer. Huh? This is from exporter, from there. So add transportation charges, no problem. Transportation charges. Okay. 500. Then handling charges also I'll add, because it is again for loading the machine in the ship. It is in the other country. Okay. So handling charges also I'll add, no problem. Handling charges also I'll add 15, no problem. Okay. Buying commission, what to do?
No, sir.
No, it is specifically excluded. Buying commission not applicable, specifically excluded. So we'll write it and write down not applicable. Huh? Okay, now freight. Assuming it is air freight, assuming it is air freight, what will happen? If it is air freight, value of freight is given, na? Value of freight is given 1000. So it will be 1000 or actual value. So actual value is 1000 or 20% of FOB, whichever is lower, whichever is lower. Correct. So actual value is 1000 or 20% of FOB, whichever is lower. So that will be 1000 or 24% of FOB comes out to 2000, na? Whichever is lower. So I'll take 1000. See if freight is understood. Guys, see if freight is understood.
So do we have to always assume that it's air freight if it's
Yes,
not
we'll
mentioned?
assume it is air freight. Okay, we'll assume it is air freight. If nothing is given, we'll assume it is air freight. Okay. And then insurance. Insurance value is not ascertainable. Value is not ascertainable. In this case, what do we take, guys?
1.125% off.
Basic FOB, right? So that is basic FOB was 10,000 into 1.125%. Done. So this all will be in dollars, right? This all will be in dollars. So my accessible value or transaction value in dollars will be this amount plus this amount plus this amount plus this amount plus this, right? And then I'll have to calculate the accessible value in home currency. Always do this, huh? Calculate the accessible value in home currency. Exchange rate, simple. Exchange rate is given, only one exchange rate given. $1 equal to 70 rupees. Okay. So 70 multiply. So my accessible value in India, accessible value in rupees, accessible value in rupees is this amount into 70. This is in rupees. Done. That's my final answer. That's my final answer. Check your answers, guys. Where you have gone wrong.
So, sir, the only if the importer pays for the transport charges, that's not counted. But if the exporter pays for the transport charges, that's counted.
Correct, correct. Because if importer pays for the transport charges in let us say from China to India, even that will come, right? But importer pays the transport charges after the goods were cleared by Indian custom authorities. So from Indian port to importer's factory, that transport charges will be ignoring. Okay, guys, is this clear? This question, any doubt? You can ask the doubt. If you have not understood anything, even if it is simple, silly doubt, you can ask me, no problem. I can repeat myself.
Sir, but you said that carriage and freight and insurance need not be counted in FOB, right? So doesn't transport be
Transport, see, freight is a different type of transport. Freight charges is what? Freight charges is for specific kind of transport. Okay, so transport charges from factory of exporter to port of shipment, that is the normal land charges, na? That is in their country. This freight charges are actual transport charges for importing from their country to our country. So that is that specific freight charges. This $500 ka transport charge, it's in their country, na? It's in their country.
Okay.
All right. And this will be the actual transportation charges. These freight will be the actual transportation charge. Done. Okay, next. If there is any doubt, let me know, guys. Okay, let us do this now. Is this visible? The question is visible now. Foreign Trade International Limited has imported one machine from England. It has given the following particulars. Price of the machine is in pounds. Freight paid air, so we don't need to assume air. It is given 2500 UK pounds. Design and development charges paid in UK. Commission payable to local agent of the exporter at 2% of price of machine in Indian rupees. Date of bill of entry is given. Date of arrival of aircraft is given. Rates are given. BCD is given. Integrated tax is given 12%. SWS is not given. SWS is not given. Still will add SWS. Okay. Insurance charges have been actually paid, but details are not available. It is paid, but details are not available, means it is not ascertainable. Okay. Compute total customs duty and integrated tax payable by Foreign Trade International. See, they have given compute total custom duty. They have not just said compute basic custom duty. Compute total customs duty. Try it then, guys. Try this on your own. Then we'll check the answers in the end. So even if you don't show adjusted FOB, that's okay, guys. Even if you don't show adjusted FOB and keep on adding all these things together, that's okay. No problem. That was just a format that the customs authority want. In your exam, you can directly show all the expenses one by one, no problem. So FOB of the machine is 8,000. This is in pounds, right? This is in pounds. Okay, I think we are starting to get the answers. What do we do with integrated tax? Integrated tax is IGST, no? Integrated tax is IGST. Integrated GST. Commission will, have they said buying commission? I told you that all kind of commission and brokerage will be included. Only if it is specifically buying commission, then it will be excluded. Only if it is specifically buying commission, the word buying commission should appear, then only it will be excluded. All other commission payable to local agents, okay, that will be included. Buying commission means what? I am buying the machinery from, let us say, China, and I am paying commission to person who is buying on my behalf. That buying commission will be excluded. All right. So let us say freight. So here the value is given. So when the value is ascertainable, this is air freight, air freight, and the value is ascertainable. So what happens? Actual value or 20% of FOB, whichever is lower, right? So actual value is 2,500 pounds, or 20% of FOB comes out to how much? 1,600, no?
1,600 is
right. Whichever is lower, So I'll take 1,600 over here. Understood, Fred?
So why will we not add design and development charges?
We'll add that now. We'll add that.
So won't it come in FOB?
That's what I said, na, that adjusted FOB and all, you don't need to do it. You can just add all the required expenses one by one. Doesn't matter. The sequence doesn't matter because we are.
So, but if we're calculating the percentage, 20% of FOB, shouldn't it be 8,000 plus 500?
No, because this 20% is always on basic FOB, na? Is it on adjusted FOB? When I've written this, what I've written over here? Everywhere on basic FOB, na? This is always on basic FOB, not on adjusted FOB. So even if you ignore this adjusted FOB, even if you do ignore all of this, that's okay. And even if you just write this 5, 6, 7, 8, that is also okay. No problem.
So design and development charges is not a part of basic FOB.
No, why it will be part of basic FOB? Design and development charges, basic FOB is just the price of the machine, price of the goods. All right.
So what does design and development charges come under? If should we calculate it or not at all?
We'll calculate now. Design and development charges paid in UK means what? Whatever design and development charges I have paid for the machine, to design the machine, to develop the machine, that will be separate. That will be calculated separate from the price of the machine. Okay, price of the machine is the basic price. It's just the basic price.
So, but does it come in? Isn't it a part of the cost, design and development?
Correct. See, design and development charges, when you capitalize anything, when you write in the asset, you write it as a price of the machine, right? But for import it is shown separately. Okay. So when you're writing as per IS 16 PPE, when you're writing machine, what you do? You capitalize the machine, capitalize the asset, inclusive of all costs, right? Inclusive of all costs. So that's why when you say price of machine, for you guys, it is this 500 is included in this 8,000, right? But for customs, we have to show all prices separately. Okay. Customs does not follow this IS 16 PP. Yeah, it does not follow it. It has to show all these charges separately.
Okay.
Okay, cleared out. Otherwise, they would have given the price of the machine, including design and development charges. In that case, you will ignore this 500 pounds. Understood, na? They will give price of the machine, in bracket they will give inclusive of design charges. Then you'll take price of the machine 8,000 and you'll just ignore that 500 pounds.
Okay.
All right, next. So design and development charges will come, no problem. These will come. So how much is this? 500 as it is, no problem. Then third, commission. This is normal commission. But that commission is payable in Indian rupees, right? So we'll add that later on. Huh? So once we convert into Indian rupees, after conversion, convert to home currency, right? Then we'll get assessable value in home currency. Assessable value in foreign currency, convert to home currency, you'll get assessable value in home currency. And then what you'll do? Then you'll add commission. Add commission payable to local agent in INR, because commission is not paid in pounds. So you cannot show it over here, even though eventually our calculation will be in pounds and converting to INR, but it is paid to local agent in INR. So while writing, you have to write in INR itself. Huh? Understood this point, na? So right now we'll not write that. Next. Done, na? No other charges are remaining, right? No other charges are remaining. Insurance is there. Insurance, they have said it is actually paid, but details are not available, so not ascertainable. It is not ascertainable. So that will be FOB, basic FOB into 1.125%. So that will be basic FOB is 8,000 into 1.125%, 90 pounds. Just check if all expenses are covered now. All right. So now you'll get assessable value in foreign currency. It will be the sum of all of these. Convert to home currency using which rate now? They have given two rates, 100 rupees per UK pound and 98 rupees per UK pound. Which rate should I take?
100.
Correct. I'll take date of bill of entry and CBIC. Bill of entry, CBIC rate. Correct. So which is 100. So when I convert it, I'll get this amount into 100.
So SWS won't come over here.
It will come. SWS will come. Even if it is not given, we have to charge SWS.
Okay.
Okay. Even if it is not given in the question, you will still charge it. Huh? But don't forget this commission payable. Commission payable was what? 2% on the price of machine. So this into 2%, that gives me in pounds and into 100. If this is clear, guys. Commission payable to local agent. So that will be, I'll just write it over here, 8,000 into 2%. That's the commission payable, but I wanted to pay it in Indian rupees. So into 100. Rate will remain same now. Once you decide the exchange rate, that will remain same. So now this will be the final assessable value. Okay, so I can call this as gross assessable value before commission, and I can call this as net assessable value after commission in home currency. And now you will start paying your duties. Have you understood till assessable value of 10,35,000, guys? Have you understood this? Let me see if there is any doubt. Okay. Can you explain once again why design and development charges would be included? In customs, when I say price of machine, I mean the basic price of machine. If this has said price of machine, in bracket they had said including design and development charges. Okay, because what happens, design and development charges are paid separately, correct? I paid to the consultant who is designing my machine. I paid separately. And actual cost of production of machine, okay, that I show separately, right? So here, unless it says price of machine is inclusive of design and development charges, okay, I'll show them separate. Okay, that doubt clear? All right. So everyone got till net accessible value now? Everyone has got this answer? Okay. So now what we'll do, add BCD. Now BCD also two rates are given, 10% and 20%. Which rate should I take? 10%, 20%, which rate?
So 10.
Correct, later rate, later rate, that is 10%. Later rate, that is 10%. So BCD will be on accessible value. This amount into 10%. See the dates. One date was 20th October, another date was 24th October. So I'm taking the later date, 24th October date. Okay. Add SWS even if not given. SWS 10% on BCD. SWS is 10% on BCD. So this amount into 10%. Okay. Then you will get what? Then you will get accessible value plus BCD plus SWS. So that is this amount. Sum of all these three, basically, is the sum of all these three. Okay. And then on this value, I'll add IGST, integrated GST. It is at 12%. It is at 12%. So this amount into 12%. Okay. So I'll get final value of imported goods. Final value of imported goods. Done. If this is clear to everyone, guys, just check if this is clear. Anyone has any doubt? Let me know. Now you're getting the hang of it. Accessible value and duties. SWS has to be calculated even if it is not mentioned. So could you please explain commission payable again? Okay. See, the commission payable to the local agent of exporter at 2% of the price of machine in Indian rupees. So that's why I have not calculated the commission while we are paying in pounds. The commission has to be paid in Indian rupees, right? So that's why I am not written the commission over here. I am writing the commission once we convert to home currency. After that, I'll pay the commission to the local agent, to the Indian agent. So my commission should be payable in rupees. So how much is the commission? 2% of price of machine, na? So that's why I taken 8,000 is the price of machine, correct? 8,000 is the price of machine into 2%. That's the commission, but that will give in pounds, right? That will be in pounds, correct? So 1600, not 1600, 160 will be in pounds. I want to convert it into rupees. So I multiply by this conversion rate of 100. So 8,000 into 2% into 100. 16,000 will be commission payable to local agent in INR. Okay, next doubt is it compulsory to convert into rupees before charging the duties? Can we? No. Before charging, duty you are paying to Indian government, na? Duties you are paying to Indian government. So before you pay the duty, it is compulsory to convert to home currency and then pay the duty. Okay. Otherwise, that duty will be paid in pounds. What the Indian government will do with pounds? It will have to convert, right? So government says convert everything in accessible value into rupees. Once you convert the value into rupees, pay us duty on rupees. Simple. Okay. I hope there is no doubt over here. Let us do one more question. Because the questions in customs are a bit different. All the questions we are doing are different. Okay, this question again is different. Tell me what is the problem in this question.
So CIF.
The problem does not start with FOB value. The problem is starting with CIF value. So when CIF value is given, we'll have to go back to FOB value first. Okay. The question has given CIF value. Okay. For valuation purpose, what we want? We want FOB value. FOB value is exclusive of carriage, insurance, and freight. Right? So first we convert CIF to FOB, okay, and then start the valuation. All right. Let us see then. A material was imported by air at CIF price of $5,000. Freight was paid $1,500 and insurance cost was $500. Banker realized the payment from importer at exchange rate of 71 rupees per dollar. CBIC custom notified the exchange rate at 70 per dollar. Find the value of material for the purpose of levying duty. So in short, we'll have to find the assessable value. Okay, so doubt is later anyways we okay, your doubt is correct. Later anyways we convert to CIF, but for that purpose that rules of freight and insurance come into picture, na? Okay, here the freight and insurance can be anything. In CIF value, the freight and insurance can be anything. We'll just deduct whatever they have given, and then while adding freight and insurance, we'll apply our rule, 20% of FOB wala rule. All right, so that's the purpose, that's the whole purpose. Okay, so CIF value is given as 5,000. Okay, now just less carriage, insurance, and freight. So carriage is not there, so insurance and freight deduct as it is, without any rules. So freight was 1,500 and insurance was 500. Okay, we are not applying any rules, so we'll get what? We'll get freight on board. So that will be 5,000 minus 500 minus 50. So sorry, we'll get free on board. We'll get the free on board value. Okay. Now what we'll do? Now we'll add insurance. Okay. It is ascertainable. Insurance is ascertainable. So as it is. So we'll take the actual value. Insurance value is what? 500. No problem. Okay. And then we'll add freight. This is air freight. So rule for air freight is what? Actual or 20% of FOB, whichever is lower, right? Whichever is lower. So actual was what? Actual freight was 1,500 or 20% of FOB is how much? 5,000 to 20%. 1,000, whichever is lower. So lower is 1,000, right? So now see, CIF value changes. So what is the value now? 3,000 plus 500 plus 1,000.
So
That's
FOB
why,
is 3,000, sir.
Sorry.
3,000 into 20%.
Oh, sorry. FOB is not, FOB is 3,000 into 20%. So 600. Okay. Yes. Sorry. So FOB is 3,000, na? So 1,500 or 20% of FOB. 20% of FOB is 3,000. Okay. So vast difference, huh? They had given CIF value of 5,000, but as per customs, CIF value is only 4,100. So why you want to pay duty on 5,000? Na? You'll pay duty only on 4,100. Understood, na? Why we are converting to FOB and again converting back to CIF? That was the doubt, I think. No other charges are there. So this will be my assessable value. No other charges are there. So this is my final assessable value. In which currency? In dollars. Right? Convert to home currency. Using which rate? Bank rate or CBIC rate?
70 rupees.
CBIC rate.
CBIC rate, 70 rupees per dollar. Okay. So finally, I'll get accessible value in home currency. So that will be 4,100 into 70. Okay. They are just asked to find the value. They are not asked to find any duty. See if you understood this problem. Why we first deducted insurance and freight, and later why we added insurance and freight. See if this
So
is
for
very
the
clear.
insurance part, why aren't we taking 1.125?
Because it is ascertainable. If it is ascertainable, we take the actual value.
Okay.
The rule is what? If insurance is ascertainable, if the value is given, take the actual value. In the above question, see what was happening in the above question. Insurance charges have been actually paid, but details are not available. Na? So the value was not available. If value of insurance is not available, I take 1.125%. But if the value of insurance is available, I just take the actual value. All right, done. Okay, there's one more doubt, I think. While writing the answer during the exam, do we need to write the explanation like for freight the lower? Yes. While writing the answer, you have to write this explanation. Why you are taking 600? Because it is actual value or 20% of FOB, whichever is lower. So that is 1500 or 600, whichever is lower. You will have to write this explanation. Because explanation is needed only for three things. Buying commission, insurance and freight. Only three explanations are needed. So it is expected that you guys write the explanations. Done. Okay, there is one more doubt. Okay, there are two more doubts. Let me just read them. Can the gap of 900 be the insurance charges 5,000 to 4,100? No, that is due to freight. That is due to freight. Earlier the freight was 1,500. Okay, earlier the freight was 1,500, but as per customs, the freight is only what, 600. So that 9,900 difference is due to freight, not due to insurance charges. Got it now, Pratik? Okay, next. Sir, what if in this question also insurance wasn't ascertainable? Then